Hey, it's Friday, February 4th. This is Mark Hines. I'm going to give you your 4-minute week in review. What happened in the markets? I've got 4 points for you. The first point is always what did happen in the markets in terms of performance. It was actually the best week so far this year for the S&P 500, gained around 2%. And then the NASDAQ did even better, up around 3%. And the Dow Jones was up around 1%. So that's very good. Also, this past week, we saw interest rates on the rise. Started out the week, the 10-year Treasury was yielding a little bit below 1.8, rose to a little bit over 1.9 at the end of the week. Interest rates are on the rise. We also saw strong earnings from a lot of companies. For example, Amazon came out this week, announced very strong earnings. Shares were up a lot. Apparently, Amazon Web Services is kind of firing on all cylinders there. Amazon gained around, Amazon's a mega cap company in the first place to begin with, but it gained around 200 billion in market cap after that earnings announcement. It was just a massive number. 200 billion is more than a lot of other companies combined, their total market cap. Sort of the flip side of that, though, another mega cap FANG stock, Facebook, announced earnings and lost 200 billion in market cap. Apparently, Facebook's advertising revenue is slowing as that company pivots towards the metaverse. But there were a lot of other sort of strong performance this week, particularly in that sort of growthier space, sort of aggressive growth stocks. We saw names like Cloudflare, The Trade Desk, and Unity Software gaining around 15, 25, and 30% for the week. So very, very strong numbers there for some of those companies. But really, to put that all in perspective, right, the S&P 500 is still down for the year. It's down around 5.8% for the year, and the NASDAQ's down even more. The NASDAQ's down double digits for the year. So the big question is, what the heck's going on? Why is all this volatility out there? Why is the market down so far this year? And really, the answer to that is the story that's out there, or the narrative, right? Warren Buffett's mentor, Benjamin Graham, has the famous quote that says the market is a voting machine in the short term, but a weighing machine in the long term. The market's been doing a lot of voting in the short term, and basically they've been voting down these sort of aggressive growth, pandemic darling type stocks, sort of these naturally socially distanced work from home internet companies that were benefiting from low interest rates and did so well following the pandemic. Well, they've been selling off lately, and they've been selling off really hard. Sort of the other piece of that story is interest rates, right? The Fed is now expected to raise interest rates 4 times this year, and that'll put the brakes on the economy a little bit. It'll slow growth a little bit, take some of the easy money out of the system. So really the narrative has been pretty negative this year, and that's a big part of the reason why market is down. But in reality, the economy is still healthy, right? We saw just today jobs numbers came out, right? Non-farm payrolls smashed expectations, right? It's preliminary number, but 476,000 new jobs added in January. The expectation was for like 150,000. So on the jobs front, we're really healthy. And then also on the sort of, individual companies continue to perform very well, even though the market is sold off and a lot of names have sold off, right? Businesses are still growing. The economy is still healthy. And it's these great businesses that are ultimately going to drive the economy higher. So the economy is still healthy, despite the fact that we've seen a lot of volatility in the market lately. We've also seen, markets are down this year, right? Stocks are down this year. So the next question on the list here is, what should you be doing as an investor? The short answer is don't panic, right? Stick to your long-term investment strategy. Over and over again, long-term investing proves to be a winning strategy. The great thing about long-term investing is you don't have to worry about the short-term noise and the short-term voting. You can buy great businesses and hang on to them for the long term. They're going to drive the economy higher. The economy is going to go higher eventually. So it's a great time to be a long-term investor. Interest rates are low. Jobs we're adding jobs. We're almost back to where we were pre-pandemic. So that's really, really good. And then there's a lot of businesses out there that are doing really, really well. I put on here an example of one business that I like that's been doing really well. It's Paylocity. This is sort of a cloud-based human resources and payroll processing company. They're based here in Illinois, where I am. There are a few towns over in Schaumburg. Paylocity is a company that announced earnings this week. They beat earnings expectations. They beat revenue expectations. They raised forward guidance. They're growing at around 30% a year, really, and they have a large total addressable market. This is a company that is really an attractive company. But if you look at the share price and you look at the valuation of Paylocity, it's down, right? It's got caught up in this tech wreck that we've seen this year. The shares are down a lot. but this is a great company. Even after earnings, a big pop, the shares were up, but there's so much more room for growth. And this is just one example. Paylocity's a maybe $11 billion market cap company. There's tons of companies out there that are in a similar boat where they've sold off really hard, but they're great businesses and they're going to go higher, right? So what should you be doing in the market? Don't panic. Stick to your long-term strategy. Don't worry about the sort of volatile voting machine in the short run. Just buy great businesses. If you're a long-term investor, you have the luxury to do that, to buy them and hang on. And then finally, the week ahead, what can we expect in the week ahead? So two things in the week ahead. One, expect more volatility, right? It's not going to go away. Volatility is persistent. And then two, there's more earnings announcements coming out. There's sort of two batches of earnings announcements that I'm focusing on this upcoming week. The first batch is more of these sort of aggressive growth stocks. On Monday, we're going to see earnings from Alibaba, sort of the Chinese internet juggernaut, right? Alibaba is a massively profitable company, massive revenues, massive growth, and the shares have sold off tremendously. Like they're down just enormously, right? So be really interesting to see what happens with earnings from Alibaba on Monday. And then, excuse me, on Wednesday, a couple of these sort of high growth software as a service companies. We've got Cloudflare and Datadog. That's on Thursday. So excited to see what happens with them. The second batch of earnings coming out this week that I'm interested in is sort of these high income securities. So for example, we'll see Ares Capital on Wednesday. That's a big dividend BDC that a lot of people like, business development company. So that'll be an interesting one. We've got Annaly Capital also on Wednesday, a mortgage REIT. Shares of Annaly have sold off as interest rates have been kind of bouncing around lately. But Annaly is an interesting one, pays a very high dividend yield. And then finally, WP Carey. This is a sort of commercial property REIT. A lot of people like the REITs. A lot of people like WP Carey. So this is one that I'm going to look for on Thursday. But kind of the bottom line takeaway, the market's healthy, right? Businesses are growing. People are, jobs are picking up, right? We're back almost to sort of pre-pandemic levels. Even though interest rates are rising, they're still very low by historical standards. This is sort of a pro-business environment. So it's really a great environment to be a long-term investor. The economy's healthy. Stock prices are down. So it's a great time to be a long-term investor. That is it for this week. Thank you very much. And I will see you next week.